We're going to talk about green color to match. What are some of the key trends moving forward into 2022? We want to notice what are some of the key components when it comes to government land sales. I'll blend into the sofa. Nuggets on the go, let's go. Alright, so we're back with Nuggets on the go. We're right here in our new studio. Check out this nuggets at the back. This is the shape of a nugget actually. In the middle of all the green color stripe. You see this orange thing? Alright, this time around we're going to talk about what are some of the key trends moving forward into 2022. We're right now at the tail end of year 2021. Congratulations, you made it. And now we are in October, towards the tail end of 2021. We want to notice what are some of the key components when it comes to government land sales, as well as the balanced inventory in the market in terms of new launches, how are the resale prices moving for condominiums, as well as we want to take note of some of the key indicators coming out in the next 2 to 3 years, in the sense that there's going to be a couple of completed projects that will hit the market. In short, property jargons that we use when we talk about newly completed projects, we call them TOP projects, meaning temporary occupation period. That's the time that the owners that bought from the launch, they bought from the show flat, from the developers, they are going to collect their keys. So in short, for the context of today's session, we'll name all these type of projects as TOP project. So these are the 4 main pockets that we're going to talk about. I'm going to look at my screen as well, so if you see my eyes deviate a little bit, don't worry, I'm still looking at you. Alright, so 4 main things that we want to discuss today is that we want to talk about some of the balanced new launches per square foot pricing. We also want to look at the new launch per square foot pricing, and when we categorize them as new launch, we're talking about those new launches that will be coming out in the next 6 to 12 months because they have been successfully bidded by developers based on government land sales that are launched this year. We also want to look at what are some of the behaviors of pricing when we look at those newly TOP projects, as well as the resale condo asking prices as well. So why do we bring out these 4 boxes and you see this graph at the bottom is that a lot of time when we look at this supply graph, so this graph is from URA, and when we look at this expected year of completion in terms of the amount of supply that's coming into the market, these are actually properties that will be completed from launches, and they include the dark red color, which are private residential properties, as well as the light pink color, which are executive condominiums. So take note that when we look at this graph, this is actually telling us on which particular year will this properties hit the market in terms of its TOP status. So these are already supply that has been factored into the market. It's just that they are going to complete on a certain year. So for example, in the year 2021, there's going to be 7,318 of the private residential units that will be completed, and then in year 2022, 10,971. 2023 is going to have a total of 16,549 with a combination of private residential as well as executive condominiums. So these are already projects that has been launched previously and they're going to be completed. Of course, what this data doesn't tell us is that they didn't tell us that how many of these completed properties has been successfully sold by developers to buyers. They're actually talking about how much supply will hit the resale market per se. So take note that the interesting thing is that when we buy a property from the new launch status during the show flat phase, the moment it's TOP, this property then translate into a resale property in the resale market. So now that we have set the context, let's have a look at the expected year of completion all the way starting from 2015 to the projection of 2024. Of course, these charts, they do change with time. The key reason is because sometimes government land sales, they have a varying kind of factors in terms of the amount of supply that hits the market. Sometimes the land plot is being activated, sometimes developer tender a plot to activate the land sales, and thus supply does change as on a year-to-year basis. So this chart, when we look at it next year, some of the figures might change because maybe some additional new projects has been launched in the year 2022 2022, and thus that affect the future supply of 2024, 2025, 2026. So take note that we have to look at this on a year-to-year kind of basis. But if you notice, there's this wave that sort of happens from 2015 on an uptrend, and then it comes down to 2019 being very low in terms of completion supply, and then it's going to trend upwards again, scaling towards 2023 to reach a higher level of completion supply, and then very likely it will scale downwards a little bit depending on varying factors as well. So what does this tell us, and how does this help us to make a decision on what kind of properties to go for, whether is it buying for our primary residence or whether is it going for investment property, and what will be the reverse kind of perspective from different stakeholders. And different stakeholders, we are talking about consumers like ourselves, we're talking about developers, and we're talking about the owners that have already bought into the market previously in some of the new launches. And let's have a look. When we look at this, what has happened in 2020 or 2021, if you've been following our Nuggets on the Go series, is that we have been talking about some key indicators in the market, is that the resale prices has been moving very strongly. New launch has also been having a lot of very healthy performance. Landed property is prime time. CCR is of course one of the segments that has not really surpassed its peak in 2030, but it's going to surpass its peak very soon. Thus, a lot of people are putting their attention on the CCR market. But what this is telling us is that 2020 to 2021, it has been the year, basically the past 18 months has been the year for resale properties. Resale properties has seen a lot of transaction volume. Similarly, it has also been the year for new launch products. It has also seen an increase in terms of transaction volume. I was just looking at the amount of transactions that has happened since January until September. Based on that level, moving towards the December phase, we might be ending the year with close to about 12,000 transactions compared to last year, which is about 9,000 odd transactions. So in terms of year-to-year volume, even for new launch and also for resale, there has been an increase in the number of transacted properties in both segments. And of course, bearing in mind, for the past 10-15 years, every month we're seeing close to about 50% of transaction in the private residential market belonging to the new launch market and 50% belonging to the resale market. So these two primary products, they both have their own audiences. But the fundamental theory is that new launch always leads the price movement, because there has to be a disparity between new launch and resale. And this disparity is created because it is technically like a vicious cycle in a sense, meaning that firstly, developer will bid for land, they will price in their construction costs, they will price in their margin, they will price in several other factors. And of course, for a developer to be able to be sustainable, definitely every business has to have a profit margin in a sense. So this margin is of course being translated into the launch price, and that is being passed on of course to consumers, and that's a natural process in the entire economy, right? So when projects are being launched at a certain price, it sets a new benchmark in a certain region, a certain district, a certain segment, thereby causing a ripple effect into the resale pricing around the new launches. And thus, every time you will see that resale owners are very excited when there are new launches popping up in their nearby plots, and they will be looking at how much are the developers going to launch it, what impact does it have on their current resale pricing in the next few years, because the ripple effect happens over the next few years when the new launches are being priced at, for example, let's say this new launch, there are two plots that were being sold yesterday at Slim's Barrack. Alright, so there are two plots, close to about 10 bids each. Projected potential launch price based on some news articles is going to be above $2,100 per square foot, because they were all bidded at about 1,002 plus PPR. So let's say if the developer is going to launch at 2001 or maybe 2002, what's going to happen is that when this project sell out eventually, let's say if I'm the buyer that bought at 2001, 2002, when I wait for 3-4 years for it to be completed, I would then want to price it in the market if I were to sell it when I collect my keys, maybe at about 2003, 2004. Because if I cannot hit that price, then there's no reason for me to exit. If I have good holding power, I will perhaps just rent it out I will not sell back at the price that I purchased if I have very strong holding power and that this is an investment property, or maybe I just buying for own stay. So if, let's say, I can successfully hit 2003, 2004 exit price, it then creates a brand new benchmark on my TOP project, and that will cause a ripple effect to some of the surrounding existing resale projects surrounding that area, and it will then create a disparity effect to create like an upward trend movement over the next couple of years. And that's how the relationship between new launch, TOP projects, and resale projects come into play. And this is the exact 4 boxes that we are going to discuss today, because if you look at what has happened in 2017, so 2017, basically what happened was that, I don't know whether do you all still recall all this news. This was the 2017 news on Business Time. It's actually talking about the property market on the verge of turning, because what happened was that particular 2 years during this season, 2017 moving to 2018, those were the years that Enbloc happened. There were a lot of HUDCs that were en bloc. For example, Real Casa that was being en bloc into real front residences, and then of course there was another en bloc that happened, and that translated to Affinity as a Rangoon. Foreign residents came from en bloc as well, and then the spillover then happened into a lot of different en blocs from OCR to RCR, all the way coming into the CCR region. So 2017, 2018, en bloc happened. Basically, if I were to bring out this chart, this was the history basically starting from 2017. So let's have a look at this black box. So basically, when the inventory in the entire market runs low on the developers kind of land bank, basically developers, they will definitely need to top up the amount of land bank inventory that they have, and they have to, of course, go through a process of bidding through government land sales or going for en bloc kind of purchase tender process and things like that. When they have accumulated land, then basically what they will do is that over the next 2 years, they will then be very focused. While they might continue to top up their land bank, they will focus to, of course, launch their projects, talk to builders, architects, and structure the entire thing, launch in the market, make sure that the campaign is done correctly, pricing is done correctly, sell it to the market. And of course, that then gave rise to the 2018 to 2020 period whereby developers were launching projects aggressively in the market. And that was the reason why over that 3 years, we saw a lot of new launches pop up in the market. And I believe a lot of people have, of course, bought into the projects as well. And when that happened, 2019 was the interesting year where new launches hits a new high in terms of PSF benchmark. And I'm not sure whether you remember back in the heydays, 2018 period, you can still perhaps buy like a 2-bedder that's below $1 million. Now, there's technically no 2-bedders that's below $1 million. We're talking about a new benchmark, entry benchmark of close to about 1.2 million. For most of the 2-bedders new launch. Anything that is below 1 mil definitely is a 1-bedder, and we're talking about 1-bedders at least at $900,000, $1 million for entry level. So this is the new benchmark that has been formed ever since the 2019 to 2021 period, as the balance inventory starts to clear out by itself through launches. And then in 2020, disparity occurs with a combination of factors, with COVID being one of the catalysts, and of course with a lot of people now focusing on their homes, getting for more bedrooms, larger sizes, more outdoor space. Of course, that gave rise to a lot of spillover effect, pent-up demand for landed properties, strata landed, 4-bedder apartments, penthouses, ground floors, and stuff like that. But the disparity also happens between resale and new launches, whereby a lot of buyers are hunting for very good deals in the resale market, lower PSF, freehold properties, or 99s properties that has that disparity between the resale PSF versus some of the new launches in their surrounding estates. That has heated up the entire resale market. So when we look at 2020 and 2021, where we are right now, the resale market has technically heated up. But something has happened right now in the year 2021 towards the tail end. We're noticing that the balance inventory in some of the new launch projects that were launched previously in the past 1 to 2 years are starting to clear out very quickly. Is because of the fact that a lot of sellers in the resale market, I mean, similarly, if I'm a seller that wants to sell my property in the resale market, if I'm holding on to a movable product, and by movable product, please refer to our previous episodes, because we explain in depth that when we're in the sellers market, not all categories categories of properties are in the seller's market. There are specific segments that are moving faster than some other segments. For example, if you're holding on to large size apartments, you will definitely move faster than holding on to a very small size apartment. The key reason is because of changing behavior after the circuit breaker. A lot of people are looking for larger size for their own stay, to have more indoor space for themselves and their kids, and working from home and things like that. So behavioral changes typically adds on fuel to some of the specific types of properties that will move faster in the resale market compared to other types. So this is just one example. So because of that, sellers that are holding on to movable products, they are pricing their property at a slightly future asking price. They're definitely not pricing their market at the current transacted price. Everybody is trying to price their market at sort of like a future asking price per se. And because of that, I think when buyers hunt for properties in the market, when they look at these two spectrum, a higher resale asking price for some of the properties they're looking at, then they were thinking, hey, then should I go for some of the balanced new launch that is perhaps going to TOP very soon in 1 year or 2 year time, and the PSF seems pretty reasonable compared to some of the brand new new launches. Because for new launches, there are two types. One is we are talking about balanced inventory of launches that has happened in the past 1 to 2 years, provided of course the developer didn't really increase the price very significantly. The second type are the brand new type, and brand new type, basically definitely the new PSF is of a new level, right? So it's definitely going to be a higher PSF than the balanced ones. Let me just take a breather. Am I talking like a machine gun? By the way, we're having this halftime commercial break. So this is our new PLB paper cup. Have a look. Yeah, so anyway, we have some new cups coming. It's of the prime hexagon shape. Very beautiful cups. We have 3 different colors. One is black, one is white, one is like PLB blue. So stay tuned. If you are one of our PLB clients, you'll be receiving this during your Christmas as one of our Christmas gift, yearly Christmas gift for our existing customers. So we're sending these cups along to your way, so for your family to utilize and enjoy them. Some of our merchandise free of charge for our existing clients for you. And okay, let's head back. Okay, so yeah, where were we? So we're talking about the brand new type of PSF pricing is definitely much higher than those balanced ones, provided the developer hasn't really increased their prices significantly. So this is one part that we think is right now an opportunity if you can hunt for this type of balanced new launches, provided of course they are in the location that suits your needs. They are in the location that suits your investment kind of angle as well. Of course, do not buy them hastily. Try to make sure that you go through an entire checklist to make sure that this is a sound investment for potential future uptrend gain, or maybe even if you cannot exit them in 3, 5, 8 years time, you can still rent out, collect rental income and things like that. Okay, so some examples. Of course, if you look at this chart, we did some comparisons with existing launches as well as some products that has just hit the market in terms of new TOP asking prices. So the second part of this nugget that we're going to talk about is that this then gives us a very interesting perspective as well, because of the fact that this has increased in price and asking price in the last 18 months. Some of this balanced new launch per square foot prices seems pretty interesting, pretty attractive as well, provided there has not increased in price yet. Because what is going to happen in the next 2 years, 2022, 2023, developers are going to top up their land bank. They're going to bid for land again from GLS, from Enbloc. Maybe that will happen. We're not saying that they will definitely happen, but as their project starts to complete in 2021, 2022, 2023, because they're going to hand over their projects to the buyers that have bought them, the TOP is going to be completed. What that means is that developers are then going to launch new projects, and in order to launch new projects, the next year is going to be a year that they will very likely top up their land bank. And thus from this graph, you can see the activity from a developer's point of view, because they are going to hand over their completed products. They then need to top up the land bank in order to launch new products. So based on our opinion, we think that 2022 will be the year that there's going to be a lot of aggressive land bids. What that might happen is that it will then create a new benchmark, new launch price. With that being said, in terms of benchmark pricing, we're also going to see this category, newly TOP, PSF will then set new benchmark prices as well, because have a look at the amount of TOP projects that are going to hit the market. It then means that the owners that have bought in this season, 2019 to 2020 or 2018 to 2020, they're going to collect their keys over here, and if they need to sell, they will definitely price their properties at least $200-$400 per square foot more than the purchase price that they bought during launch. And then we're going to see a new benchmark in this category also. So we're going to see two new benchmarks, this and this. And with this continuous movement in resale asking prices as well from the resale sellers, it then means that if I can hunt for something here, this could be one of the remaining competing products left in 2021-2022 that might have decent entry in terms of PSF and quantum price. So what this means for you is that, in conclusion from this episode, I think it will be good if you can continue to hunt for resale condos that has good attributes. If you can hunt for freeholds, or you can hunt for 99s that have very good entry price in terms of PSF or quantum price. And of course, after you've done your homework to make sure that, PLB, in short, we have this mood analysis that we have a scoring system of close to 30 factors that then allow us to give a final scoring upon a 100-point system on whether this project has a higher scoring compared to the other 3, 4, 5 projects. And of course, if you need a consultation service with PLB, we have a buyer specialist team that specializes in analyzing mood analysis, pricing mechanism for our buyers and investors. So we go through that lengthy process with our clients over 2 to 3 different sessions. You can click on the link down below if you need to speak to some of our consultants. But of course, if you're doing your own homework yourself, do continue to hunt for resale properties that has good attributes. And then there are a lot of hidden gems in the freehold 999-year leasehold market. There are also a lot of hidden gems in the 99 years projects that has very good entry in terms of PSF, quantum. And the second category that you can look at is definitely this segment, which are the balanced new launch PSF pricing entry price market. And of course, do take note that when we talk about PSF, we also want to look at the entry quantum price. So these two segments, very interesting segment to look for in the last quarter of 2021, moving forward towards 2022. So we hope that today's nuggets on the go is beneficial for you. Of course, we want to look at what we have been talking about in the more visual format. Tune into our YouTube channel. If you are now on the road listening on Apple Podcasts or Spotify, you can listen on the go, but I think visual format where we're showing these charts to you will be on YouTube channel and of course IGTV and Facebook as well. So we hope that today's episode adds value to you. Once again, we're going to leave all the links down below on previous episodes if you need to gain access to our webinar series that we have done with some of our partners as well over the past 2 months. Landed webinar series. You need access to the 83-page report to what is available within a 500 meters radius from MRT line. All these links are down below right here for you to sign up. It's free of charge for you, for our listeners and audience. And meantime, stay safe and take care as we're in October season right now, and we hope that everything turns out for you well. And of course, stay prudent as well before you purchase any property. And always remember, it's very easy to purchase, but make sure that you visualize the exit. Look for disparity effect. Look for prime hexagon that we've been talking about. And once again, my name is Melvin Lim. Happy to have you with us till the end of this episode. And meantime, take care. We'll see you on the next one. Cheers. G stories. I thought I knew myself cannot breathe. Let me take some deep breath. Okay.